Yeah, you can tell the rest of the class has started in the group so that I want us all to start on the same page. You can tell the rest that the class is starting. So today, basically, it's just an overview, and that's why you find that Mwalimu doesn't have a hurry because you're looking at an overview. So this is what I need us to have, sharing my screen right now. Sharing my screen. Sharing my screen. So I believe my board is visible. You can confirm on your end if Mwalimu board is visible. So this is of course advanced financial management FM. So all of us, I want to welcome you guys for this semester 3. Of course, semester 3 is one of the shortest semester that we do have, and we are looking at almost 83 days, 83 days to your exams. So as we are starting our semester, first thing, I am literally a believer. I am a believer, and all that we normally tend to do, we normally want to start by, of course, praying to God to give us, number one, good health. We also pray to God to also give us, of course, the aspect of His protection and His wisdom as we are starting this semester. So we pray to Him to give us good health, to give us life, and to give us, of course, wisdom as we are starting this semester. And I believe, of course, He will give us all that we request from Him. So as we are starting this semester, looking at advanced financial management, these are very interesting unit because of so many myths surrounding FM, so many myths surrounding FM. I know there are so many myths surrounding advanced FM, but I want to assure you that these are one of the most interesting papers that we do have in advanced level. What we will be expected, of course, to look at in advanced level. Remember, this is an area that you are expected to select papers. So even before we jump deep into advanced financial management, remember the papers that we do have in advanced level. Of course, we have this set of papers. Of course, we have the theory papers. We have the statement papers. And this will help you, of course, in making a decision as well. We also have the quantitative papers. See, we do have the quantitative papers. So looking at the theory, we're looking at advanced auditing and assurance and leadership and management. These are literally the theory part. Looking at the statement papers, we're looking at advanced financial reporting and of course, advanced taxation. These are the statement papers. And the quantitatives, we are looking at FM. And of course, we are looking at FM and MA. So theory, let me also not forget about advanced public financial management. So these are the papers that we do have in advanced level. Advanced level, remember at the same time, we talk about compulsory papers and there are selective papers as well. So the compulsory papers, what you must do, we read about L&M, talk about advanced MA, talk about advanced financial management, and talk about advanced financial reporting. So these are compulsory papers. So regardless of the papers that you're doing right now, still as at the end of the day, you'll be required to do, of course, what? The other papers here, like LM, MA, FM, as well as FR. For selective papers, my good students, you have to select between taking one or two. You can either take advanced taxation, you can either take advanced public financial management, or you can take advanced auditing and assurance. So of these three papers, you can either do double specialization. Double specialization simply means you can take two papers, or simply you can take one paper. These are upon your decision. So in advanced level, we have, you can either do 5 papers or 6 papers, depending with your selective, So the first three, A, L&M, APFM, those are theory statement. You have a FAR, advanced taxation, and quantitative, we have FM as well as MA. So in our quantitative, whatever that you're doing today, it is part of our quantitative. And we are looking at what? Advanced financial management. So what Mwalimu will do basically today is just an overview. What we're expected to cover or look at, as well as the best strategy that, of course, we can all have, the best strategy that you can apply to make sure that, of course, this sinks in very well. And that is what we will be doing, of course, just right now. So the approach should be, number one, I want us to have a very, very positive mentality, regardless of all the myths that we've been hearing about financial management. Regardless of all those myths, I want us to have a very, very positive attitude when you are looking at FM, because I can assure you, those myths are for those who normally don't study smart. But of course, with smart strategy, you'll find that this is one of the most interesting paper, because for sure, we can easily, or you can easily say, now if I told you to look at it for the purpose of exams, you can easily say what you might be tested. That's the most beautiful part with, of course, what? Advanced, of course, financial management. We can literally say, or rather you can easily say what you're going to be tested. The most beautiful part. See, so looking at overview, what will we be expected to cover? That is what Mwalimu wants to look at, whatever that will be expected to cover, and the best strategy that we're going to use, of course, to cover the same. So in this case, imagine we only have like only 9 topics. They might seem few, but some of these topics are literally wide. We only have 9 topics. To start with, of course, there is interesting topic number 1. And topic number 1 is one of the most important topic Topic number 1 is one of the most important topics. We will be expected to cover advanced capital budgeting decisions. Advanced, of course, advanced capital budgeting decisions. Advanced capital budgeting decisions. So this is what we'll be expected to cover. And Mwalimu is saying that, of course, this is one of the most important topic. This is one of the most important topic that all of us, we do all that we can do to make sure that we perfected on this topic number 1, advanced capital budgeting decisions. These are one of the most important topic that we do all that we can do to make sure that we have perfected on this topic number 1. Because at this point, we will be expected at least to apply the basic knowledge that we obtained at our basic level of financial management. Also, in addition to that, we'll also be adding some few elements that probably we've never covered, but whatever basics that you had, the foundation would be very, very important at this level as well. It is at this point, we'll also be looking at some of the advanced formulas like certainty equivalent method, talk about scenario analysis, utility analysis, some of the common capital budgeting pitfalls. We'll be covering the same in topic number 1. So topic number 1, Mwalimu is saying that this is the most important topic that we must be able to have in our fingertips, marking it with an asterisk, indicating how important that topic is. So after we are through with that, that should take us to topic number 2. In topic number 2, we'll be expected to cover portfolio theory. So we have, of course, portfolio theory and analysis. Portfolio theory and analysis. So looking at portfolio theory and analysis, the same concept that we did at our basic level, only with an additional element that we'll be looking at some of other factors to do with what you're referring to as capital asset pricing model, arbitrage pricing model, but ideally the basic knowledge that we obtain at our basic level will come in very handy here. So the approach of Mwalimu will be, I want us to approach this concept, or I'll be approaching this concept as if we've never done it before. That will be the approach. We're going to approach it as if we've never done this before. We are literally starting from the ground. That will be my assumption as we'll be covering these elements. So that will take us to topic number 3. Topic number 3, in this context, we will be expected to learn about advanced financing decisions. Advanced, of course, advanced financing decisions. This is what will be expected, of course, to learn at this level. And advanced financing decision also is one of the most important area because, yes, it relates a bit with what we did earlier in our basic level. Remember what we did earlier on when you're talking about the aspect of capital structures. Remember the concept of capital structures, what we did at our basic level. So this is some of the items that we'll be looking at this point. So in this case, we'll be incorporating some various components which are literally very key at this level. So looking at that, take us to topic number 4. In topic number 4, whatever that will be expected to cover would be mergers and acquisitions. See, we have mergers and acquisitions. These are very important elements that will be expected, of course, to cover at this level. Now, this is new and also very practical because this will touch on what surrounds us in terms of or in relation to finance. A good example, like for example, most of us must have heard this story that is going around about, imagine like Equity and KCB coming together. say, the idea of them merging, the idea of them coming together. These are literally the giants when it comes to matters to do with, of course, financial businesses. Imagine them coming together. So a good example is like this is literally merger. Say another take a good example like when you're about acquisition. Something that I know it happened just not long ago when remember all of us we used to use Twitter, but what happened? Elon Musk came and he acquired, not in good terms, but he literally acquired the aspect of Twitter, which now is known as what as X. So you'll find that whatever that we'll be covering in mergers and acquisition, the whole idea is very practical. These are things that do surround us. So in this case, we'll also be relating with what surrounds us so that we can literally see the importance of this area because it is very, very practical. These are things that happens. These are things that do affect us. See, so in mergers and acquisition is one of the shortest topic, but you'll find when it comes to computation. But again, you'll find that it is very, very interesting. It's very, very interesting because number one, it is practical, very, very practical as well. See, so that is very important, of course, for us to be able to note. So in addition to that, that should take us to topic number 5. That is capital, corporate restructuring. So we have, of course, what we're referring to as corporate restructuring and reorganization. Corporate restructuring and reorganization. This will be topic number 5. So we're about topic number 5. Corporate restructuring. We are looking at corporate restructuring. Corporate restructuring and reorganization. Corporate restructuring and reorganization. This is what will be expected, of course, to cover in topic number 5. And in this context, you'll find that more so right now, yeah, there are so many things that do affect businesses around. A lot of businesses are closing. More so when you're looking at it in this side of Kenya, for example, where we are actually, a lot of businesses are closing. And the majority, they are trying to do some restructuring to the point that they should survive. So in this context, we relate with what is happening with the businesses around us. In this case, we relate now to study, basically, when, in this case, how can you predict that this business probably will not survive? How, in this case, are we going to, what are some of the causes of financial distress that we can come about? In this case, when you read about restructuring, what are some of the main elements that we need to, of course, eliminate and the ones that we need to maintain? So the most beautiful part with advanced financial management, you realize that majority of the concepts here in are literally ones that will always tend to affect us when it comes to matters to do with the practical, of course, world. So at this point, up to this point, I want to make it very clearly. Now, for the purpose of exams, I'll just tell you frankly, for the purpose of exams, you must be perfect with the first 5 topics. You must be perfect. I'm using the word perfect. You must be perfect with these 5 topics for the purpose of exams. For you to say that you want to increase that confidence of passing this paper within the first attempt, the secret that Mwalimu is giving us as you're starting this first class is the first 5 topics are literally the key. These first 5 topics are literally, these are the key for you to pass that paper within the first attempt. These are the keys. The first 5 topics are literally the keys. Very important that we should be able to master the first 5 topics very well. We should be able to master the first 5 topics very well. This is literally the key for you to pass advanced financial management without a lot of hassle. That should take us to topic number 6. Topic number 6, in this context, what will be expected to cover would be financial risk management. Talk about financial risk management. So financial risk management, what will it entail? In this context, you'll find that we just want to analyze, of course, the concept of derivatives. At this point, we'll be looking at derivatives market and
Mwalimu, we have lost you.
so saying that a majority of this area, you'll find that basically it's more of a theory. Yes, Jack?
Mwalimu, at some point we lost you. I don't know if it was only on my side.
On the area of international financial management, yeah. So
No,
I was mentioning
from topic number 6.
Yeah.
From topic number 6, we lost your voice.
From topic number 6.
Yes. I think my colleagues can confirm.
Okay, sure. No worries. As Morimo is analyzing, we're saying that looking at financial risk management, you'll find that these are also an area that, yes, it is important. And for the purpose of exams, of course, we expect, say, like 5 marks therein, which are also very important. So looking at topic number 7, international financial management, majorly, part of it is majorly theory. Majority of it is majorly theory, international financial management, whereby some few components, like 10% of the same, is basically computation, but a huge chunk is literally theory. So looking at topic number 8, in this case, we're about real estate. Talk about real estate, of course, finance. We will be about real estate finance. Real estate finance, it will be upon us to understand, of course, how do we normally account for real estate in context of maybe instruments of real estate. See, we'll also be expected to understand the mechanics of real estate mortgage. So majority of this area is basically theory part. So with the review that was done in last year, remember there was a review that was done in your syllabus last year, that is June 2024. There was a review that was done. So in this context, you'll find that there's a computation part. So it has not been tested, but there is a computation part under this area, which we cannot, of course, assume. We'll have to look at it. There is a computation area in this case that we'll be looking at it, which was with these amendments that they normally tend to do, there's that computation part that we'll be looking at, of course, under real estate finance. So looking at that, that should take us straight to topic number 9. So what will you be expected to understand in topic number 9? These are simply contemporary issues and emerging trends. See, talk about the contemporary issues, and emerging trends. See, contemporary issues and emerging trends. Again, this is more to do with the aspect of theory part. This aspect to do with the theory part, So by the time you are looking at, or rather the whole of this semester, which, as Mwalimu is saying, frankly, where we are sitting, we are considering like 2 months and like some 3 weeks. Yeah, 2 months, 3 weeks thereabout. That is to say, we have very, very limited time. And with this limited time, will also require a very good strategy. A strategy that will help us to make sure that we've analyzed all of these items and also provide us with a very good time to do what? To do our revision. So where we are sitting right now, frankly speaking, we are looking at a very limited time. So what will be our strategy? What will be our strategy in handling, of course, all these elements together? The strategy will be, of course, number 1, we're going to start with the longest topic, which is number 1. This will be our strategy. We are going to start with this as part of our number 1, advanced capital budgeting decision. After we are through with that, of course, we'll jump down and look at real estate finance. This will be our number 2, because it is basically bit to do with theory, and therefore, of course, Mwalimu will share with us this bit, which in the end of the day, you'll find that I'll share and explain some of these concepts therein, which it shouldn't be, of course, pressure on our end. So after we're done with topic number 2, of course, the key element I want us to jump straight to topic number 4. This will be on number 3. We jump to topic number 4. After through with that case, of course, we are going to jump to topic number 2. That is portfolio theory and analysis. So that after we are done with that, remember we'll treat this as one topic. We'll treat 6, 7 as one topic. So after we are through with that bit, this will take us to, of course, topic number 3 will be on number 5. This will be on number 5. That will be on number 5. Then, of course, this will be on number 6. And finally, we are going to finish with this bit. Then you're going to finish with 6 and 7, literally being part of repeating them as one. So the structure here would be, I want us to employ this strategy. And I'm very sure that once you are through with this bit, the rest, of course, will be flowing, because as Mwalimu is saying, this is, of course, one of the longest topics that you'll be expected to have at this level. So these are one item that I want us, of course, to use, or the approach that I want all of us at least to apply. And I know it is going to save us a lot. I'm very sure that it is going to save us a lot. So looking at this, before we start all these elements, there's one important fact that I also want us to discuss. And this would be some of the basic concepts that we did earlier on. I'll have to remind us some of the basic concepts that we did, which would be very vital when we are looking at advanced financial management at this point. It will be very vital that we have these concepts in our fingertips, because these are the basics that will help us to understand all of these items. The basics that will help us to understand all of these items, even before we start anything else. As Mwalimu mentioned, today was just but an overview. But again, I'll take you through some of the basic concepts that we must be very good at, because I know how important it is at this level of financial management. Another strategy that I want us to employ, the fact is time is very limited. So what Mwalimu will also do, all of us must be having access to our platform. You must be having your account on, of course, our LMS. You must be having an account here. All of us, you must be having an account on our LMS. So the strategy that I want us to use is this. Just as we've always done, I want us always to make a date with ourselves, sacrifice the little time that we have, so that when you come to, of course, your account, I'm looking at the firm, that is advanced. So if you come to your advanced financial management, of course, other than the past papers, the class notes, there is important elements. See, we have these topics which are arranged topic-wise. We have this area of what we've arranged topic-wise. See, say for example, tomorrow probably Mwalimu is saying that, you know what, I want us to handle, say, like techniques of funding risks. You have, of course, the classes in advance. Just come, you get the classes in advance, which you can go through the class even before you do anything here. You go through literally the class, everything that you need to cover at that point. You can as well, of course, have a chance to go through like downloading the same. See, you can literally come and download to watch offline at your own time. Maybe probably the next time Mwalimu says that, you know what, I want us to go and check, say like, sorry, I want us to go and check, say like, maybe another bit, probably tomorrow we are going to handle, say like, maybe APV. See, can literally come and check some of the questions, some of the cases there. So we literally have that chance to go through all these classes in advance. Concept of CAPM and the rest, we literally have the chance to come and check all these items in advance. So that whenever Mwalimu is doing this item in class, we're not starting from the point of zero. But what we'll be doing, of course, we have that concept that we'll be having in advance. So with this cooperation, even with this limited time, I know we can cover everything and also provide us with time to do our revisions as well. Also, it will give us time to do our revisions as well. So what are we going to do today? Because other than just looking at the overview, I want to take you through some of the basic concepts that you did at your basic level, which I know that is very important, of course, for us at this point. It is just a matter of reminding ourselves on what we did at our basic level, because I'm very sure it will be very important for us at this level. So allow me to raise this point, believe that all of us will do have. And what you're going to handle, of course, majorly it will affect, of course, this topic, advanced capital budgeting decision, topic number 1. Because you say either way, we are starting with this first topic, advanced capital budgeting decision. That is what we'll be starting with, advanced capital budgeting decision. These are what we'll be starting with. So, this is what we'll be starting with. So Mwalimu is saying that before we go and do a dive deep into this, let me take you back. This just reminder, flashback. Flashback, or simply reminder on what we did at our basic level, which will be very important at this point. This is just a flashback. It is expected that you should be having this knowledge at this point, but what Mwalimu is doing, Mwalimu is taking us back, just a little flashback to gauge and bring our mind to speed on what will be expected to cover at this point. So just a flashback, and of course, reminding us on what we will be expected to cover at this level. This flashback will entail the capital budgeting decisions. This flashback will simply entail the aspect to do with capital budgeting decisions. So looking at the methods of capital budgeting, looking at the methods of capital budgeting. You say this is just but a flashback. Methods of capital budgeting. First of all, the whole idea of capital budgeting, we want to look at a case whereby we are investing on capital expenditures. And therefore, if I told you to invest on these capital expenditures, we must make a very conscious decision when it comes to matters, of course, to do with what we need to invest or what will give us the highest return. And looking at the methods, if at all I can take you back, remember, we had two main methods. Number one method is what we normally refer to as what? Non-discounting techniques. Non-discounting techniques method, where non-discounting, recall what we did in regard to the payback period. Payback period. Payback period. Recall the accounting rate of return. Accounting rate of return. We say this is a flashback. So for payback period, if I told you to analyze our payback period, we are looking at that duration that it will take for an investor to recoup back the investment. Duration that it will take an investor to recoup back its investment. And at this point, you normally tend to look at it in two perspectives. We have where we have regular cash flows. And consider the aspect of irregular cash flows. Irregular cash flows, see? Irregular cash flows. So we have regular cash flows and we have, of course, irregular cash flows. So for regular cash flows, in this context, my good students, recall, we are looking at a situation whereby we have equal cash flows. We have equal cash flows over the years. So in this context, determining that duration, it is simple. Why? Because I only need to consider whatever my initial investment was, initial investment, and we have to consider all of this by what? By our annual cash flows. Annual cash flows, because the whole idea is that we are earning equal or same cash flows over the period. And looking at it in this context, the whole idea here would be that as at the end of the day, this will give us that amount that we will be expected to have or the period that we will recoup back all our initial investments. This is regular cash flows. And recall, these are what you did. The same concept will also be very important at this level. The same concept will also be very important at this level. We have irregular cash flows. So irregular cash flows in this context is where we are looking at situations whereby our cash are unequal. We have unequal cash flows. Unequal cash flows. Looking at unequal cash flows, therefore, you'll find that then how would we be expected to determine this duration that would give us back our initial investment? So at this point, we will be required to remember the cumulative method. Cumulative method. We'll be required to remember the cumulative method. So what about the cumulative method? Cumulative method will tell us that, you know what, at this point, I need to have the time period, or that is years before recovery. Years or year before recovery. Recovery of what? Recovery of our cash flows. We need to add back, of course, or we need to add the component of, that is a balance to recovery, balance to recovery, balance to recovery. All of this you are going to divide by the cash flows in the year of recovery. Cash flows in the year of recovery. Cash flows in the year of recovery. See. So this will give us the summary of payback period, where we are talking about regular cash flows and we have irregular cash flows. So getting regular cash flows, we're simply looking at initial investment over annual cash flows. And the irregular cash flows, you hear about the cumulative method, and these are how we go about the cumulative method. So it is important to note what we did at our basic level. Looking at that, we have the accounting rate of return. The accounting rate of return, in this case, it uses the accounting profit. So we simply want to determine our average returns with what? Our average initial investment. This is what we'll be looking at under the accounting rate of return. So accounting rate of return, a quick flashback, we're saying that we simply want to determine our ARR. We want to determine that ratio of our average returns. We divide by our average cost, initial investment. See? So this is what we look at under ARR, the accounting rate of return. This is what we talked about under accounting rate of return. See, under accounting rate of return, this is what we talked about. So these are the main methods under non-discounting. These are the main methods under non-discounting. Very important for us to be able to recall. So at this level, we won't be interacting a lot with non-discounting, but it will form part of whatever that we'll be covering. So we'll not be interacting with them a lot, but you'll find that we'll just be getting a sentence somewhere. So it is important to remember what we did at our basic level. What we will be interacting most with at this point is now the aspect of discounting techniques. Is now the aspect to do with discounting techniques. We will be interacting with discounting techniques so many times. And in this case, if at all, I can take you back to what we did. Remember, all these are flashbacks, by the way. All these are simply but flashbacks of what we did. So that when we start working it out, our task will be very, very easy. So what will you be expected to handle here? We talk about what we normally refer to as what? The discounting techniques. We have discounting techniques. So what about discounting techniques? Number one, recall the concept of NPV. Net present value. Recall net present value. Recall net present value. NPV. So looking at NPV, my good students, we normally look at NPV as one of the most important methods when it comes to capital budgeting. This is one of the most important methods that we always tend to apply anytime we want to make capital budgeting decisions. So looking at NPV, the whole idea, we just want to look at the difference between, of course, the present value of our cash flows, present value of our cash inflows, and our initial investment. And our initial investment. See? So you simply want to talk about present value of our cash inflows with less our initial investment. And this present value will depend. The present value of cash flows will depend. Will depend with these two sets of cash flows. Remember annuity and remember lump sum. Remember annuity and remember lump sum. Annuity, we talked about equal cash flows. Equal cash flows all through the year. And for us to determine our PV for annuity, we must recall that our factor, which is present value interest factor annuity, given our rate, a number of years, we normally tend to talk about 1 plus, or 1 in this case, minus into 1 plus r raised to power negative n. All of this we divide by r, if at all you can recall. So this is our present value interest factor annuity given r number of years. So long as you realize that you're dealing with equal cash flows, so long as you realize you're dealing with equal cash flows, then this factor must always tend to come at the back of our mind. Annuity. This is what we did at our basic level. And this will be affecting us in almost every component that we'll be handling at this level. This will affect us in almost every element that we'll be handling at this level. So what Mwalimu is trying to say is that this is one of the most important elements that we must, I'm using the word must, have in our fingertips. One of the most important elements that we must have in our fingertips. What about lump sum? But all we can go back and have a look at lump sum is where we're talking about, number 1, either cash flows at the end, cash flows at the end of the period, or simply we are looking at irregular cash flows per period. See? And in this context, what are we looking at? We must be reminded of the component of present value interest factor, given our number of years. Present value interest factor, given our rate, number of years, where we are talking about 1 plus r raised for negative n. So at any time we are dealing with our cash flows and realize that we are in a situation whereby my cash flows are irregular. we are in a situation whereby our cash flows are irregular, then I'll want us to remember this. I'll want us to remember this. We are dealing with a situation where we realize that our cash flows is irregular. I'll want us to remember this. That my factor here would be present value interest factor annuity given our rate number of years. Recall, number 2, we are talking about aspect to do with IRR, internal rate of return, IRR. So these are discount factors that will equate our NPV to be 0. I normally refer to this as what? Break-even point of NPV. Break-even point of NPV. So these are discount factors that will equate our NPV to be equal to what? To 0. And in our sensitivity analysis, this concept will come in very handy. In our sensitivity analysis, this concept will come in very handy, because remember, yes, we assume that you did this at your basic level. But as I've told you, the approach of Mwalimu will be, I'm assuming you've never seen this before. And that's why Mwalimu is taking us back to the flashback of what we did. So you realize that when you'll be looking at sensitivity analysis, then internal rate of return will be very vital and very key here. Will be very, very vital and very key. So that is to say, we're looking at a discount factor that will equate our NPV to be equal to 0. And IRR is always termed as aspect to do with trial and error. Trial and error method. These are what we'll always be looking at as IRR, trial and error method. So at this point, I want us to always have this in mind, but a recall that IRR will always be talking about our lower rate. Add, of course, the NPV of the lower rate, NPV of the lower rate, we are going to divide by NPV of the lower rate minus NPV of the higher rate. We multiply this one by the higher rate minus the lower rate. Higher rate minus the lower rate. How to go about IRR? How to go about IRR? So lower rate plus NPV of the lower rate, we divide by the NPV of the lower rate minus NPV of the higher rate. We multiply by a char. A char simply means the higher rate and the lower rate. This will clearly tells you that whenever we are looking at IRR, I'll be having two rates. I'll be having the lower rate and I'll be having the higher rate, which in this context, it is important for us to recall this. We did this at our basic level. So it is very important for us to recall that. Another important element that you must also be able to recall, of course, would be the aspect to do with profitability index. We talk about number 3, PI, profitability index. So profitability index is simply the ratio between, or the ratio of, our present value of cash inflows, we divide by our initial investment. See. So this is important. This is a profitability index. We're saying area about the present value for cash inflows we divide by our initial investment. We divide by our initial investment. So this is very important to note. This is very important to note. Present value of cash inflows we divide by our initial investment. So it is simply the ratio or PV of cash inflows and our initial investment. So this is also very important for us to be able to recall the same. It is important for us to be able to recall this. So once we are through with this, then you'll find that the next important area that will also be required to understand, so not common at this point, but just good to remind ourselves among the method, recall the aspect of discounted payback period. Discounted payback period. Discounted payback period. Exactly similar to the payback period, only that this time round we will be dealing with the discounted cash flows. Yes, it is a payback period component, but what we'll be looking at, we'll be having what? We'll be having, of course, the aspect to do with the discounted cash flows. That will be the main element, discounted cash flows. See, so once we have that in mind, then you'll find that our task here, looking at some of the basic elements that will affect us directly at this level, Mwalimu just wanted to remind us on these elements that we did at our basic level. We will be interacting with them most of the time, especially NPV and IRR, especially NPV and IRR. We will be interacting with this a lot, especially NPV and IRR. We will be interacting with it a lot. So this is what will be expected to have, my good students. These are what will be expected to have. And Aloysius, as we are approaching this paper, the focus is that whichever perception that you might have had, whichever, of course, the theory that you might be having about FM, one thing that I want to assure you is that with proper or a right perception and mentality, this is one of the most, of course, one of the most interesting units that we do have. This is one of the most interesting units that we do have with good perception and, in this case, positive attitude. This is one of the most interesting paper that, of course, we do have. So today we'll just but overview. Our next segment, remember, we're going to start with topic number 1, as we've said, and the next bit, my target would be, we'll be looking at, of course, certainty equivalent measures as well as sensitivity analysis. Actually, we're going to clear 3 concepts in our next class, because having looked at the basics, our work will be even much easier, because we'll just be taking some notes on the basic levels, or what we did at our basic level. And herein, Mwalimu has reminded us. So guys, at this point, I want to invite any question. Any question? I wish to invite, probably you have a question you wish to ask Mwalimu, then this is the best time as you're starting, of course, this class today. As you're starting this class today, remember the rules of the class. The first rule is that we don't have an answer like I don't know. We don't have an answer like I don't know. When Mwalimu asks a question, whether you're right or wrong, Mwalimu will expect you to give an answer. Rule number 2, of course, the reason why you realize that, of course, even that is what we've always done. If you reach a certain number that will close live virtual, we only, of course, have very few people in live virtual. The rest will go for pre-recorded version. Is that I'll always be giving us chance to unmute. Where you feel like Mwalimu is going fast, where you feel like you're not understanding the concept, the class will always be very interactive. You just unmute, you ask your question, Mwalimu answers, and we continue so that we go as a group. We don't go to a point that this person is fast, this one is slower, so that probably the slower will catch us later. No, we'll always move as a group, Of course, the other bit is that I'll always expect cooperation from us because we have a limited time. So what you realize is that Mwalimu will be requesting for some extra classes, but this will always be communicated in advance. So if I communicate, like say probably in the next 2 days, can we have an extra class? I'll expect us to cooperate and subject for agreement. We must agree for us to proceed with the class. So in this case, of course, these rules will help us, of course, to gauge, not only just to pass, but also to understand the concept, right? Because remember, what you're doing also here will affect you in your business data analytics, more so the concept, some concepts of FM here. So it is very key and important that at least we understand the concept right here and in this segment that you're doing. So guys, any question? Any question? Great. But only don't have any question. Of course, Mwalimu has prayed for grace for this semester, and grace is what you're going to get. So to that point, you guys have a very beautiful night. I'm going to share the real estate notes, the international financial management notes, the theory part. I'm going to share in our group so that we have chance to interact with them as you're starting the semester. So even by the time we reach there, I think we'll have already gone through the notes. So guys, to that point, I want to wish you a very, very good night and see you in our next class. Unless there's a question,